Crypto Hotep here with another investing video. We're on week 37 of the Family Portfolio and Dividends Tracker. If you're unfamiliar with this concept or these tracking videos, feel free to go to my channel and go to week number 1 where it all began, and it'll give you the reason why I'm doing this, the methodology with picking of stocks, and my whole thought process with this. These videos are really for my own edification, and hopefully my family can see them when I'm gone and maybe carry it on or educate themselves on the power of investing. These videos were also made to showcase that you can invest small amounts of money and the snowball effect will happen, especially with dividend related investments. So in a nutshell, basically, I shortlisted several stocks, several companies for my family to choose from. They chose what they wanted, and then we chose M1 Finance as our broker. With M1 Finance, you can not only create one big portfolio, but you can create sub-portfolios within it. Each sub-portfolio was dedicated to my family member, and his or her choices of stocks were allocated accordingly. Every week, we go through the portfolio and we look at the markets. We find out, what happened in the markets today, or this week, I should say. We go over dividend activity, account balances and such, and we just kind of journal our investment journey. As always, this is not financial advice at all, but if you find these videos helpful, feel free to like, subscribe, comment, and let me know what you think. And with that being said, before we jump into week 36 or week 37, let's take a step back and look at week 36. So week 36, our account balance was $1428.12. Our money weighted rate of return year to date was 24.14%. And then our dividends earned were $9.83. So let's look at this week. So this week we popped up, hit another milestone, over 1,500 in account balance. Very good. Weighted rate of return, that's not a typo, up 30%, up over 30%. And our dividends earned, $10.32 now. So what has been going on? So let's go to the activity here. So the activity, we've had a couple things, mostly buys. We did have, between this week and last week, we have a little bit dividend activity in Caterpillar, ticker CAT. 4 cents was there. Now, again, if this is your first time watching these videos and you may be scoffing at 4 cents for dividends, you have to remember and also go back to the first week where you'll see the account balance. The account balance in that first week was around $200 or so. And the reason I'm pointing that out is we're just building this account and this portfolio up from a very small amount. So dividend investing is very hard when you're building your portfolio with small amounts of money. And that's why it takes that snowball effect. And when you begin dividend investing, you're going to get these small amounts here. So the focus shouldn't be on the actual amount of the dividends, but just to be consistent with your investing and consistency in getting these dividends, and you'll be just fine. But we did have some buying activities. So again, every 2 weeks, consistently, we put in a little money here and we do a little buying. So we bought some Nintendo, that was for the kids. Target, Celsius, my wife's stocks I already know. Celsius is cheap. Pfizer, I believe that was mine. I believe that was mine. Pepsi, and then McDonald's. Pepsi, I believe, is my wife, and then McDonald's, our oldest, I believe. We also had another set of buys. So I was blessed to get a bonus type of pay for my job, and I put some of that money, some of the extra money into this portfolio as well. Again, nothing too major, but again, if we get paid extra, we want to essentially put some more money into this as well. So what did we buy? We bought Apple, bought Starbucks, bought more Target, McDonald's, Celsius, Johnson & Johnson, I believe that was mine, some more Nintendo, Pepsi, Costco and some more Pfizer here. Pfizer and Johnson & Johnson are trading very low right now. Okay, so let's go back to the portfolio. And as always, let's see what's going on with the activity. Now, one thing I did notice before we go into the portfolio activity for each family member, one thing I did notice about M1 Finance is this chart here. If you look at this chart, you have different time frames that you can set the chart as. You can do a daily, weekly, monthly, 3-month, year to date, 1 year, and then all. I usually set it on year to date here, but one thing I did notice is you can view this in full screen, but they added 2 options here. You can show dividends, which is pretty cool, and then you can show cash flow. So, i.e., the transaction in which you're putting cash into the portfolio. And this looks a little bit better when you're viewing this from a full screen standpoint. And this is actually pretty cool. So you could see all the top cash flows in here. You could see your dividends as well right here at the exact date and time. So it's a nice graphical representation of that. That's pretty cool. So good feature here from M1 Finance. They keep updating this technology. It looks great. Okay, so bottom to top, again, wipes at the bottom. And as we all know, if you've been following, Celsius has been the Achilles heel. Celsius down over 65%. That's not a typo. The portfolio as a whole down over 25%, which we are leveling out. I know that doesn't sound, too good, but last week and the week before, my wife's portfolio was typically down about 30% or so. So we're leveling out right now. Dividends earned 31 cents. Celsius here down considerably with Celsius. Pepsi down over 4% with Pepsi. Not too concerned about that. What's holding up the portfolio? Tesla. Tesla's up over 36% in the position for her. And then Google up over 9% there. Celsius did have a little movement in terms of the price this week. Again, I am going to wait until the year end to see what we're going to do with Celsius. I'm really not concerned. I know it sounds crazy just being down by that much right now, but I'm not really concerned with the Celsius position right now. Okay, let's go to our middle stocks. And our middle money weighted rate of return year to date, 14.62%. Dividends earned 49 cents. And again, this is the very consistent portfolio. Now there is an outlier right now this week. Target did not do very well on their earnings this week, and that's why you see the significant dip. They have pulled back in terms of how they expect the holiday season to go, I should say, and they're acting a little bit more conservative. So on the retail side, they're feeling a little pressure from the overall consumer, i.e. you and I, as people have pulled back a little bit. So the markets did not like that at all, and we probably can see this in the chart. Let's see if we can see this a little bit here. See this in the chart for the week. Yep. So we can see here this big dip. So we went from 154 all the way down to 123, down over 18% and leveling out right now. So again, their earnings was not well received from the market. They did not like that uncertainty, and it was shown greatly. Okay. As a result, the stock did plummet for Target, but it seems to be leveling out now. I really think Target's going to have a decent enough holiday season, and so the next earnings should be just fine for them. Let's see what we got here. And then in terms of some of the outliers in the green, we have Amazon, Starbucks, Costco, and then again, Tesla. If you've been following, my family and I have been on a Tesla spree. So all of us own Tesla and up considerably, 36% with Tesla. Okay. Let's go to our youngest. Our youngest money weighted rate of return over 44% year to date. Yep, it's not a typo. Dividends earned 36 cents. Our youngest portfolio, not really concerned about the dividends. It's more of the gains and more of that growth. So Nintendo, very similar to our middle, down over 2.5% for Nintendo. But again, Tesla up over 100%, up over 120%, ridiculous. Starbucks up over 30, and Apple up over 30. Very easy portfolio, not a lot of parts in the portfolio. Sometimes you don't need that much with that portfolio. This portfolio here is very striking. So this is our oldest portfolio, up over 70%. Dividends earned, $1.03 here, and the big four. Tesla up over 60% there. Apple up over 24% there. Costco, the GOAT, up over 21%. And then McDonald's down almost 1%. Not really worried about McDonald's at all here. But this has been structurally, this has been a very consistent and strong portfolio. If you've been following the channel, you know that our oldest, at once, she just had Apple and McDonald's at some point. It was just two sections of the portfolio, and then we added Costco and then also Tesla, and it's just been a game changer. You can see the gains, and also if you've been following, you know the point in which more money was deposited for our oldest stocks at their request. So their balance shows significant growth, and I do love to see that. And then mine, again, I don't have the 44% gain or the 70% gain. I have the modest 19%, which is still good. As you can see, very, very consistent, slow and steady here. Dividends earned, $8.13. I'm not mad at that at all. I like the dividends. I'll just kind of go to what hasn't been working right now. So I think over the past 3, 4, 5 weeks, everything was in the green. That's changed now in terms of the sectors of where my stocks sit. Pharmaceuticals have taken a large hit, in particular Pfizer and Johnson & Johnson. Why is that? Well, it's because of the new administration coming in and RFK Jr. taking the helm as Secretary of Health. So that, in a nutshell, caused the markets to not feel so good about pharmaceutical companies, and some of the big pharmaceutical companies, those being Pfizer and Johnson & Johnson, just because of what they produce. And that's all I'll say on that. But as always, I consider these a good buy, especially Pfizer right now. Pfizer's a very good buy right now. And we can jump right into Pfizer really quickly, and I'll show you what I mean. So Pfizer here, let's look at, a 1-year chart. Actually, we'll look at, let's look at a 5-year. See if we can see a 5-year. Okay. So again, Pfizer is at lows they haven't seen since, we'll look at April, even lows here that they haven't seen since 2019. So if you look at Pfizer, dividend yield over 6.5%, PE ratio 33.2. I think we are at a steal right now for Pfizer. 5-year down over 34%. Yikes, not very good. Down over 12.5% year to date. But For me, I'm looking at the cheaper price for Pfizer and the dividend yield, which is not always the case and not something that you want to continuously like look at when you're looking at stocks. But I think Pfizer is cheap right now, so I don't mind at all buying this. It's a considerably good dividend company, so I don't mind kind of loading up on Pfizer here or Johnson and Johnson and getting it cheap. Everything else pretty much has stayed the same. Growth is really ridiculous right now. It's not at a big balance. It's only allocated 5%, but MicroStrategy is the reason behind that. As you can see, up over 170% was MicroStrategy, Palantir up over 200%, Tesla up over 55%, CrowdStrike up over 46%, and then DTE at the 4%. You can see the values in them. Again, we're not really focusing on that value and that amount number. I'd rather focus on the gains and the returns, because these amounts will grow. As we keep putting money into the portfolio, these amounts will grow very steadily. Could be slowly, but at least they'll grow. But again, though, the meme and growth stocks here are very, very volatile, which is the reason why I'm only allocating about 5%. Everything else is kind of slow and steady here. And that's typically how I like to allocate my portfolio of my stocks. So with that being said, guys, we have, for the record, this week 37, we have a balance of 1512.71 with a money weighted rate of return year to date of 30.71%. Dividends earned over $10.32. If these videos helped at all, guys, feel free to like, subscribe, comment, let me know what you think. But as always, thanks for watching and happy trading.